Well, hello, everyone. Welcome to a Chat with Traders community presentation. This is your host, Ian Cox, and today, happy to have Vincent Bruzzese back on the show to do a follow-up. We interviewed him a couple months ago, and today we'd like to touch base and find out how things have been going and get some take on some stocks. So welcome, everyone, and welcome back to Chat with Traders, Vincent.
Thank you. Thank you for having me back. Always a pleasure.
Yeah, great. So how would you describe the state of the market, and what are you seeing?
The state of the market right now, the market's on meth. It's just it's utterly insane that you have a market that has priced in 3 rate cuts till the end of the year. You have a Fed saying, no, we're not cutting rates. In fact, we're thinking about maybe raising them again. Then you have a debt limit that there's no deal on yet for the debt ceiling. You have some of the biggest bank failures in history, this recent, like a stone's throw away from today, and other banks still teetering on the edge, and the market's just, fuck it, up we go. It's that type of problem that, got us into these messes to begin with. And it's kind of insane talking to, because I have an account over at JPM, and I have the Ameritrade and all that. And with JPM, I get to speak to their traders and their analysts and all that. And they are befuddled. And I'm like, you're the ones friggin' doing it. Like, what do you mean? It's like, you're the biggest bank out there. It's like, yeah, we don't get it. I'm like, well, if you don't get it, and you're the one pumping the market, then what the hell? So it's a very difficult market to trade. And I think I told you last time, and it hasn't changed. I speak with many pro traders, and they make their living doing this, and they make a good living doing this, and yet some of them have been doing it for 15, 20 years, and they all say without a pause, this is the hardest market they've ever traded.
Huh? Yeah. On your Twitter feed back on April 3rd, you said that any market that rewards the abdication of methods and rules while punishing those who follow an edge-based strategy is virtually untradeable. How often do you find these type of markets in your trading career? Is this extremely rare, what we're seeing right now?
Yeah, it is. It's rare. One, it's a bear market, right? So just even despite appearances to the contrary, it's still a bear market. And bear markets in and of themselves are the minority of what you would be trading, right? If you randomly chose a date, you'd land on, more likely than not, a bull market. But bear markets tend to be because of a singular cause, right? Whether it is the housing crash, in 2008, or the dot-com bubble in 2000, there's a singular cause that can be pointed to, and it is the resolution of that screw up, of whatever blew it up, that the market is waiting for to return to its regularly scheduled programming of just going up and being trending. This market, on the other hand, started out with a singular cause, which was inflation, but now is the product of various apocalyptic, potentially, scenarios that there is no one single cause. So you have news drops coming from every angle that can completely change the tenor of the market at a moment's notice, and they can come from anywhere. So that makes it a unreliable market to trade, and it makes your technical indicators less reliable as well.
So how was the first quarter of 2023 for you?
Well, I made, I post, as you know, I post every trade publicly. The exact trade, I even put the position size, the exact trade, all entries, all exits. Maybe there's a 2-second delay from when I get in and exit and post it. And you can see right there on your broker time and sales, my position size are big enough, it's verified. You can look at it. So my profit, net profit in Q1 was 2.15 million, with a starting base of 5 million. So despite the difficulties of the market, I did quite well. This quarter, I'm off the pace. My profit right now, as of today in this quarter, is probably around, I think it's around 600, 625. So I'm not quite on the same pace as I was Q1, but still profitable.
Wow, that's quite phenomenal first quarter. It looks like you did it roughly 40%-ish or a little bit more for the quarter. And already this quarter, you're still up well over 10%. That's quite extraordinary for a quarter. What do you key things do you attribute the success to, despite this difficult market?
I mean, look, we talk about it, there's method and mindset, and you can method without mindset will get you nowhere. Mindset without method, obviously, will also get you nowhere. You have to have both, but method is useful to get through a market like this in the sense of it keeps you focused on only taking the highest probability trades, right? When most people think of day trading or short-term trading, what comes to mind is sort of these low float shit stocks, and you go in and you try to grab them before they go up. And yeah, those momentum plays you know, every now and then you do, but that's not trading. That's not what trading is. Trading is finding a stock that you can identify institutional buying or selling in that is outside of the noise that retail traders will make. And once you do that, your job as a trader is to follow that trend, not go counter to the trend, not try to outthink the trend, but follow the trend. Essentially get the breadcrumbs off the table, right? And as you see, those breadcrumbs can be fairly profitable. Those pretty freaking good breadcrumbs, but that's your job. But the mindset of most people is, I'm going to short, right? You see SPY right now, I'm going to short that. You know, it's amazing to me how much people bring their baggage from their everyday lives into trading. And someone said to me, one of my moderators, fantastic trader and person, looking at the wiki that's in the subreddit that we have, Real Day Trading, that it's really also, it's more teaching people how to live a life, a successful life, than it is even on to be a trader. And that's true. One of the freeing things for me is I'm not selling shit. I don't have shit to sell. I don't have anything to shill. I don't want anybody to buy anything. I don't want their money. I clearly don't need their money, as obnoxious as that sounds. I don't. And if I'm going to take someone's money, I'm going to take it off of some rich asshole who has too much of it. I'm not going to take it off of someone who is trying to make a better life for themselves and support their family. So I'm not charging anyone anything. And that gives me a certain freedom of, I'm here to tell you the truth. I'm not here to sell you that you can make money overnight and become a millionaire. I have no reason to do this. And quite frankly, it's a pain in the ass most of the time, other than to try to help people take advantage of something that can give them financial independence.
Yeah, well, that's your track record certainly speaks to your method is quite effective. In your in your Twitter feed, quite often I see that you take positions on fairly large, well-known stocks, decent market caps. And I was curious about the trade that you recently did in ticker symbol GSIT, which appears to be a penny stock. I don't know if you would be able to share a screen and kind of break down kind of what you saw in that and kind of what attracted you to the penny stock as opposed to your common large cap stocks, which you trade.
Sure. Hold on here. Let me see if I can grab there and share the screen. Share that one there. Okay. And share that. Can you see this?
Yes.
These two TC 2000 here. Okay. So on this stock here, which you're right, it's not the typical stock to trade. And I forgot exactly when you remember what date it was I traded that?
I believe it was the, let's see, what day was that? Was it the day of the pop? I wasn't entirely clear on that because I
believe it might have been, I see here. Yeah, it might have been the day of the pop there. I'd have to check that. You can probably just see right here. GSIT, see trade orders account, positions, history. There it is, GSIT. Yes, it was 512, right? I think I got in at 507 here, I think. Well, I did 539 and then I added at 507, average probably around 522. Then I believe I sold it at 572. Then I got back in again at 583 and then sold it at 628. Yeah, right around there. Okay, yeah.
Yeah, given the moves, the violent moves here, that looks like those kind of changes can occur in like couple minutes. It looked rather explosive. What did you see in this penny stock that attracted you?
What was interesting, I mean, about this particular one, whereas other ones I don't tend to gravitate towards trades like this, is one, the market right now is also running on narrative. And one of those narratives is a very hot industry, is semiconductors, right? That's everything associated with it. So here you have, and I don't know shit about this company, but here you have this company that is in the semiconductor industry, in the tech sector, reports earnings, right? And you could see there's literally nobody gives a shit about this company, right? I mean, you're looking at volume here of maybe 30,000, 40,000, every now and then you get this little day of a couple 100,000. You have a low float of like around 24 million shares, I believe. And here all of a sudden it reports earnings. Now, it's reported earnings before, and earnings were decent. In fact, it had better earnings reports previously in terms of quarter over quarter when you look back at it. But here you have this desire to buy up anything semiconductor. Earnings get reported. It blasts right through its 100-day moving average, blasts again through the 200-day moving average, pulls all the way up here, way beyond. Here you have a previous high right in there and stops right there. So here I have if I go to this chart here and do a simple trend line on this, right into right there. And you can see up to it stops, up to it stops right there. And there's your stopping point on the stock. So it blasts up, blasts through. I grab it, sell it, grab it again right around here, sell it up here, because until it can get through this level of resistance, I'm going to use this as my sell it resistance point. So I have a very clear selling point. I have a lot of volume going in. I have a hot sector right off of earnings. I figured I'm going to make an exception on this one. And, you know, that's why I took that particular trade.
I see. So it was in a sector that you followed, and so you gave it more credence to get into the stock because the semiconductor industry is industry that you follow.
I mean, I follow all the industries. I just it's sort of what's hot right now, right? To keep in mind, like what's working at the moment. Today. So today you have this sort of melt up on SPY, and you look, and it's driven by tech, followed by consumer cyclical, and you have healthcare, and even though you have this day today where SPY is very bullish, real estate, consumer defensive, healthcare, utilities, and communications all red still today. So this is a very kind of sector-driven push in the market currently, and it's driven by tech. Very odd to see tech as a flight to safety, but investors aren't also the brightest people in the world. So what can you say?
Great. So one other stock that you got into recently, SRPT, medical stock. Just curious, you mentioned in there that you exercised a long call. Is that correct? You're taking possession of a large number of shares. Do you sometimes go long and hold, or?
This is a case where it totally fucked me. And it's not, I would say it's not their fault, but whatever. So JPM goes, okay, we believe that SRPT is going to get approval off of this committee, right? Their feeling is this committee is going to vote to approve, and that the FDA always accepts a committee's recommendation on this. After the FDA had already said, we're not sure about this medication, they put it to this committee and it gets pushed back up. All right. Stock got hammered, right? When it turned out their multiple sclerosis medication might not get approved, SRPT tanks down. So they're estimating that there is a 80 to 90% chance that the medication gets approved. And if it does, stock would go to roughly 150, 160 a share. That's what they're telling me. Okay, great. So I say, fine, I want to buy the share. Let's buy the shares. Just buy the shares straight up. Give me 10,000 shares. Why don't you buy the options? Okay. Options are pretty expensive here, but you think it's better to buy the options and limit my loss just in case the committee votes out. Fine. So I buy 100 of the at the money options for, I think it was like $11, right? So it's $110,000 in call options. Right after I post that on Twitter, 3 different people say, we think that is not going to trade tomorrow on Friday. I'm like, what are you talking about? And they go, well, look at these other stocks that had the exact same thing happen and they didn't trade the next day. The stock was halted the entire day while the committee decided. So I go back to JPM and I'm like, what the fuck? I'm like, if this thing doesn't trade tomorrow, I have options expiring tomorrow. I'm going to basically get assigned at the money where I could have just bought the damn stock. Now it's going to cost me $110,000 to buy the stock at 119 when I could have just bought the stock at 119. Why? It's going to trade. We're 100% sure. It's going to absolutely trade. You're sure? Yep. Okay. Next day, Friday. Hey, it's not trading. We know. The committee should vote before a close of market, and it'll trade. Okay. It's an hour before close of market. It's still not open. We think they're going to vote within the next half hour. All right. Yeah, they didn't vote until way after the market closed. Got assigned. But Monday comes. I mean, the committee went, as they said, 8-6 in favor, voted, it went through. Monday comes, stock opens to what, 150 something. And by that point, option was exercised automatically because it was in the money. And I have 10,000 shares and I sold it. Right. So, okay, great. Made about 200,000 or something on it, but I didn't need to have bought the options. So that little mistake that apparently 3 random people on Twitter knew more than the people over there at JPM. And I keep pointing that way because that's where my Bloomberg terminal is. And so that's where they are. That's them. But yeah, okay, fine. No problem. I made money and wouldn't have if they didn't point me in this direction anyway. So all's forgiven. But yeah, that's what happened there.
Oh, okay, great. Then you don't typically look to exercise call options to be more of a buy and hold over a period of time.
No, the only time I do that is if I'm playing earnings, let's say, and let's say I bought 200 calls or something, and the stock goes up $10 after hours. I'll delta hedge it by shorting the shares right there, and so the next morning they exercise the option, covers the short, and locks me in at that profit, right? So that's a way to lock in your profit in earnings if you don't want to risk it reversing at any point. You just short the shares, or if you have puts, you just go long the shares, and that locks in your profits.
Mm-hmm. What type of typical trading strategies contributed to your first quarter success?
It was one thing I did more last quarter than I typically have done is, and it's one thing I preach up and down, back and forth, and people still can't seem to get the idea, which is when you're in a winning trade and you're making a profit, if your first thought is, I want to take profit, you're doing it wrong. Your first thought should be, how can I make more here? I was right. My thesis was right. Should I add? Should I, hold longer? Like, what should I do to maximize this profit here? Not, I need to take profit. An example would be today. I bought 500 calls on DPZ, Domino's, right? I got the 300 strike calls that expire next Friday at $10.49 a call. And at some point today, about midday, Domino's was up, basically where it is now at around 312, and those options were worth $13.70. I was up at that point $3.20 on 500 calls, so I'm up roughly $160,000 on the trade. I still have that position. I'm not going to close that position until I'm up roughly my goal. My target on that is $30 profit. My target on that is a $1 million trade.
What percentage is that?
Percentage of?
A percentage return on that trade. Do you have a target percentage return, or is your target based on what you see in the charts of overhead resistance and so forth?
I mean, on DPZ, my target right here is based on, and I'll share the screen again. Put up DPZ. There, and share screen. Okay. So on DBZ, I have an alert set here, right? For it to break out of this channel, this downward sloping channel, which it does today, right there, right?
Vincent, we're not seeing your screen.
You're not?
No,
Okay.
not yet.
on screen. Oh, there we go. Try that.
There we go.
Yeah.
Okay, great. So here you have DPZ, and here is this downward sloping channel. And this here today, I have an alert set for when it's going to break out, which it does here, breaks out, breaks above the 15-day EMA right there. This stock has an ATR of about $5, $6, so a decent range on it. Its next point of resistance is at 318. Now, if it hits 318, I'll be roughly $10 a contract in profit, so around 500,000. So that's my first stop right there to see, will it blow through this resistance, which I believe it will. Then it goes right up to here, which is the 100-day moving average, which is 329. Once it hits 329, I'm at $30 in profit. That's $1 million. It seems to work out pretty well. That's my target right here. So I'm looking for DPZ to come up here. I don't have earnings until July, so I don't have to worry about that. It is a consumer cyclical, so the sector is right below tech. It is a flight to safety type stock, and the volume here you can see is slowly growing over the last few days here as well. So that's what I'm looking for. I'm looking for a target there. Maybe it'll bounce down over here. If it hits this and comes back down and doesn't retest it, then I'll break the profit, then I'm out. But if it breaks through, I might add even here another 250 contracts and then let it run. So one of the two.
Mm-hmm. And how often are you influenced by the implied volatility of pricing for the options versus going long the stock?
I tend to go at a 0.8 delta or higher. Mm-hmm. So I'm trying to strip away as much of the premium as possible and get to parity. The deeper in the money you go, the more you're kind of taking advantage of the leverage that an option gives you. And you're taking away sort of all the premium that you're paying, and you got all this intrinsic value. Most traders would rather get 5 out of the money options rather than 1 in the money option. And it's so backwards way to trade. I can't tell you how idiotic it is to pay money for a contract that says you have the right to buy something at a price higher than it currently is now, and you have to pay me for that right. That's what an out of the money call is. Oh yeah, we'll let you buy this $100 stock for $105. Oh, by the way, you have to pay me $200 for the right to do that. Well, where in the real world would anybody do such a stupid transaction? But people see is, oh, it's super cheap. I can pay 50 cents a call. I'll get 10 of those for $500. And if it rip, I'll make all that money. Okay, well you need to have a win rate there more than X% to ever see a profit consistently. And they price these options in a way where you're not going to get that freaking win rate. It's built in. You're gambling, and if you want to do that as a trader, fine. You need to do one thing first. Stay out loud and admit, I'm gambling. I'm gambling here. Stop trying to convince yourself. Stop trying to go, oh, it's going to go and break through this level here and it broke through resistance. But bullshit. No, fuck that. You're saying, I'm gambling. And when you say it out loud, and if someone says, oh, why'd you take that trade? I'm gambling. All of a sudden, it becomes a little bit more difficult to justify it when you start telling the truth, which is you're gambling. Go to Vegas, you'll have a better time. You really will. But no, this is what people think trading is, because people come into this space and they get totally scammed, and they get told the wrong things. They get taught the wrong things. Nowhere else do you go into what is a legitimate occupation, and 95% of the people giving you advice have never been profitable. Everyone gives advice on how to, this is what I like to do. I like to use fib lines. I like to use the cloud here. Oh, do you ever like to take money out of your account as profit? Or do you only like to deposit more? Because why the fuck are you telling other people how to trade when you can't trade? I don't. Well, here's my journal. You can see, look, I'm in profit. I made 10 million. Okay, great. I can show I made 30 million in any journal. Post your trades live, show your position sizes, entry and exit, time stamped. It can't be faked. Then I'll listen to you.
Yeah. Do you ever take the other side of the trade by selling the puts and selling the out of money calls?
Yes. And oddly enough, that's a lot more what my wife's area. And I'll explain. So my wife manages we'll call it the long-term investing account, kind of. So what she's doing is she's buying leap calls, very far away, and then selling calls against those leaps every week. So it's called the fig leaf. So she's doing that 4-man's covered call, you can call it, but just using leaps. She's also selling puts every week. But our rule is, and the general rule should be, I never sell a put. She never sells a put on anything we don't want to own. If I'm selling a put on something, it's because I want to own it at that cost basis. I'm okay with owning it at that cost. I'm okay with taking the premium and then selling the put again next week and keep banking premium on it until I finally get assigned, in which case I bank so much premium, my cost basis is actually much, much lower. But we never sell a put unless I'm totally okay with owning the stock. And that's, if I want to own a stock, I'm like, oh, you know what, I really want to own, whatever, Apple right now. I won't buy this, I'll sell puts until I get assigned Apple. Why buy it if I can keep getting it cheaper and selling puts on it? If I want to own it, I want to own it.
Is that for situations where you don't see necessarily an imminent rise in the stock, but you see long-term that there's maybe a base forming, or that there's selling puts at a particular strike price that is represented by a decent level of support, rather than say, well, if you're bullish on Apple, wouldn't you just buy the stock and go long, or not, because you're not expecting anything imminent?
Yeah, it's more like, you take a stock like ASML, which is a strong stock. It tends to trade sideways and then pop up and trade sideways. But if you look down at the fundamentals of that company, it has a monopoly on the entire semiconductor industry. If that company were to go under, you'd have no more semiconductor. They're the only ones who make what they make in the world. And they have such a head start, no one's going to catch them. So yeah, I'm fine owning shares in that company. And it tends to follow SPY, the market. If the market is up X percent, ASML is going to be up X percent. If it's down, ASML is going to be down. There's rarely a time other than earnings that stock's going to, run and pop. So yeah, I'll sell, and it always has very good premium. The premium on that stock tends to be very good. So we'll sell puts on it until we get assigned. Looking for that type of scenario where there's really good volatility, but yet I'm not worried about selling the put and then it dropping $50 on me and then being stuck. So she tends to look for that, like on Netflix. That's another one that tends to be good. But again, we're from obviously both of us are from the movie industry, and so you know, that also gives us some insight on which ones we would be interested in owning the stock.
Great. We have a question from the audience.
Yeah.
Simon asks, how important is keeping an eye on the sectors through a heat map? I'm still new at this, and I rarely look at the sectors for sector relative strength, sector rotation, etc. But I just look for stocks with good relative strength and weakness and good daily chart to support that.
Well, you're doing it right. If your first step is always, is the stock relatively strong or relatively weak to the market? And by the market, let's say SPY is a proxy for market, right? Is it strong or weak against SPY? And we tried every other iteration of, try the QQQs, different things. SPY is the one. And by that, SPY is flat, stock is moving up. It's moving up on its own strength because SPY has a gravitational pull. And if SPY is going up, 75 to 80% of the stocks are going to go up with it, right? And biotech, your cheaper stocks, they'll go off and do their own thing, but most stocks are going to, if your stock is proportionally going up more than SPY is, that indicates there's an institutional element to it, right? That's how that's the only thing that gives a stock like that enough power to go up proportionally more. Then your next step, as Simon says, is to check the daily chart. Is the daily chart in the pattern on the daily chart equally as bullish? Am I looking at a daily chart where the stock is above its SMAs? It just broke out of compression. It's a bullish. So if I take this position for a day trade, but the market goes against me, the stock goes against me temporarily, I'm fine swinging it because it has such a solid daily trend. I then will every day look at, and here I can show you, I'll share the screen again here. There we go. Let's go here and share. Okay, so I'm using TC2000, right? But I can also equally use Option Stalker, and you can also equally use Ameritrade. But if I go here, just to simply look, here's all the sectors right here, right? I can quickly glance and see, okay, tech is leading it. It's up 1.83%. Communications are down. If I want to dig down into the sector, I click on it. Here's all the industries within the sector. And then I could see, okay, semiconductors are actually leading at 3.1 and 3.4 here. The equipment and the semiconductors themselves are leading the industry that is actually is leading the sector that's leading the market. And then I can dig down even more and click on here and then go over here and say, okay, which stock in this industry is actually pulling in the most volume and is the strongest? And I can look down, and obviously NVIDIA, AMD leading the way over here. There were times where recently, for example, there was the energy sector. And in the energy sector, I believe it was this industry here, oil. And what I noticed was that there was a stock in here while this entire sector was down. This particular stock, and I believe it might have been VLO, but I'm not entirely sure. I'd have to let me see here. Which one was it? XOM. Not that one. Not that one. Might be here. Might have been VLO. This particular stock was up while the entire sector and industry was down. This one was up, standing out. And so I went long on that stock, not because of any other reason other than it was popping while the industry itself was weak. And I held it for, I believe, 4 days, and then managed to take $2 a profit per contract on that. And you can see here, by the way, I will keep all my positions. Like, so these are positions I have. These are, each one of these is a position. Each one of these is a position here. And so I'll also be able to look up and glance at how all my positions are doing. I shorted AMAT into earnings here. And as you see, it's doing jack shit. It dropped and now it's just hanging around there. So I can just take a quick glance. So that, I mean, that's why I like this program here. But I also, if I can now show you real quick, here, let me see. Do that, and I'll go back to here, and I want to show you this one, I believe. Yep. Okay, and there. So here's where I get my news from Trade Exchange, right there, right? So I'll get all my news coming in here. And then here is from one option. I belong to this community. This is called Option Stalker. And here I can look at which stocks are relatively weak, which ones are relatively strong to the market on a 5-minute basis. I can look at it on a 10-minute. I can do a custom search where it can, where is it here? Move this down if I can grab it, but there it is. Go there and see if I can move that. Okay, there we go. I don't know if you could see that custom search thing I just put up there.
Mm-hmm. Yes.
Okay. So I can go in here and search for, I wanted to have liquidity of, -3. I wanted the stock price to be over 5. I wanted to have had heavy volume today. It has to be over the prior day's high, above this, this, and this. And it has to have strength versus buy, let's say on a daily basis. You hit scan, and then here are all the stocks, right? And if I want to narrow it down, I can continue to add filters. So I'll use this as well to take a look at any stock that might be standing out on the parameters I give, and then go back and look at the industry or the sector that I'm looking at.
Great. Thank you for sharing that. It's pretty detailed. So essentially you rely on that option scanner to present the trades to you.
Yeah, it's a stock scanner. Yeah.
Right. Great. We have another question from the audience from Patrick. What are the 3 most crucial lessons you would share with your younger self from your current experience if you had the opportunity to travel back to your early trading days, knowing that implementing these lessons could potentially boost your level of success by 10-fold compared to your past achievements in those early days?
Good question. It wouldn't be do more drugs because I had that one covered. Flat, done, right? So, couldn't do any more than I do. Okay. So one would be, there's this theory or feeling in among stock traders that in order, every successful trader will give you a story about how they were down and out, how they got blown out of the water, right? And it's true. But just about everyone has a story about getting their ass kicked, and I do too. And what I would have told myself is, you don't have to do that. I would have told myself to stop being so obnoxiously arrogant and think, I can just jump in, put money in, jump in, and make a profit consistently. Because if you take a step back and look at it and go, okay, this is one of the best jobs in the world. And I have some standing here because I had one of the best jobs in the world. I made movies. It's that's a pretty good freaking job. I was a professor. I ran companies. I had jobs that usually are kind of like the dream jobs. Like, oh, I want to be this. I want to be that. I had those jobs. This job is better. And what do you think it takes to have a job like this? Do you think that it is just a matter of, I'm going to put my money in and click on it and go, oh, that stock's going up, I'm going to buy it. That's going down, I'm going to short it. The arrogance of thinking it's that easy is the first thing I would have smacked out of myself, because there was no reason for me to blow out 2 accounts before it got into my thick head. All right, stop putting money in, take a step back and see, can this be done? Yep, found, okay, here are professional traders. I'm watching them. It's confirmed. I validated that they are making money consistently. It can be done. How long does it take? It takes years. It takes, minimum 2 years to actually get this right. And this is what you have to do. So that's one thing I would have told myself. The second thing I would have told myself is mindset matters more than method. And because, let's face it, this is not brain surgery. It doesn't take long to learn these methods, right? It doesn't take long to learn how to play poker, right? I mean, you can do it in an afternoon if you're paying attention. You could learn how to play. You're not ready to sit down and consistently make a career playing poker, though, right? So it's kind of like that, where the better poker players and the better traders trade with a mindset. And it's a mindset that I've seen in people that grow up in wealth. There are people that you meet, and if you ever meet like these, rich, whatever you want to call them, I have plenty of names for them, that grow up in wealth. They're very disconnected from reality. Most of them are, but they have a particular mindset that is different than people like us that grew up in a paycheck to paycheck environment. And when you do that, you're always waiting for bad shit to happen. Always. Because bad shit always happens. Something good happens. Okay, when's the bad shit going to start happening? It always friggin' does. The other two always drop. When you're trading, that mindset gets carried over into, I have profit, I'm going to lose it. The market's going to take it away. I need to take profit now. And then you say the same stupid shit that every trader says. Never went broke taking a profit. Yeah, you have. Everyone does, because you took profit too early, because you were scared. And then inexplicably, we do the opposite when we're losing. All of a sudden, we have hope. All of a sudden, we're the eternal optimist. Now, our trade is down. Our $7 option is now at $4. It'll turn around. It'll pop. Where the hell does this optimism come from? 2 minutes ago, you were the most pessimistic, dire son of a bitch around, saying the market's going to take away your profit on this trade, but on this trade, very soon, it's going to pop. Why? Because in our lives, we are always thinking we're due. I mean, eventually something good's got to happen, right? I mean, it's just by pure chance, bad shit can't keep happening. We're eventually going to, so we buy the scratch off tickets and eventually we're going to hit. And that's the same mentality we bring when we're losing a trade. So the second thing I would tell myself is cut that shit out. Like, that is not the mentality you need to bring trading. And then finally, it would be, stop thinking, it's a little bit like the first one, but slightly different. Stop thinking you can outthink the market through simply your common sense. Oh, okay, so we're coming out of the pandemic, and that means more people are going to need to buy cars. Everyone who bought an electric car has already bought it, so there's a whole new thing. I'm going to go long this because of my mental gymnastics thought experiment tells me this is going to happen. More people are going to disconnect Netflix now. Well, I'm going to short Netflix because they're getting out of the house. Or do you actually think that in these big institutions who are paying millions of dollars for analysts. Sarah sitting there in, research and go, hey, don't you think more people are going to buy more electric cars? Let's check that out. No, only Gary from Indiana figured that shit out. And he's going to buy it and go long because, no, of course it's not priced in. Yeah, you're not going to outthink it, right? It's not going to happen. What you need is identifiable intelligence and information if you think you're going to get an edge. So, for example, I shorted Tesla on its earnings. And when I did that, it was because I asked JPM what were the expectations on the gross margin for Tesla a month ago. What were they 2 weeks ago? What are they now going into earnings? The expectations on gross margin did not change. It stayed flat. It stayed stable. This was the gross margin expectation. But during that month, the price of the cars were flat twice. So 2 times he cut the price of the car, but the gross margin expectation didn't change. That to me was a disconnect that I felt I could take advantage of, and I shorted Tesla. So unless you have something specific like that, you're not going to outthink the market. So those are the 3 things, other than, the usual shit of enjoy life, blah, 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 whatever, go out for a fucking walk and pet a dog. Great. Everyone knows that. Have fun. But other than that, those are the things that help us out.
Mm-hmm, great. One post that you have on Twitter, you say, a large part of trading is being honest with yourself. How good are your market instincts? How often do you feel the market should drop and it goes up? Very often enough it hurts. So the question I have is, can we train our market instinct to some degree and to help aid us? Or is that should we just ignore that and just go strictly with the numbers, what we see in the charts and earnings reports and catalysts, that kind of thing?
No, you absolutely can, and you should. And in this sense, ChatGPT, for example, is your friend. And I'll tell you why. Because what you need to do, particularly in a bear market, much more than in a bull market, is you need to sort of major in economics again. And in a sense of, you need to start understanding, all right, when they raise interest rates, why is that a bad thing? Why is this a good thing? What does it mean when the yield curve is inverted? Why? Why is that a bad or good thing? And you can take all these, you can grab any article or these news blips or whatever, copy what the head of Goldman Sachs is saying, paste it right into GPT and say, explain this to me in plain English. And boom, it'll come out and explain it to them, right? You can use that tool and it's free, you can use that free tool to decipher what's happening. The more you know about the macro and social economic environment that is acting on the market, the more you'll be able to hone those instincts. And it'll never be 100%, right? Like, today, SPY is melting up. I mean, this is just pure fantasy on the part of investors here. They're hoping for best case scenario across the board. And those things are hard to predict. However, what you need to be able to do is, when a piece of news comes out, is know how permanent is that effect going to be? What is the magnitude of that effect going to be? And so you'd be able to start interpreting and getting a better sense of why the market is doing what it's doing, to start having a good thesis on it. And sometimes it's really hard to stick to that thesis. Like right now, if you had a bear thesis on the market, which is entirely justifiable to have, you would be very hard pressed at the moment. Your shorts would be hurting. You'd be watching this thing go up. You'd be frustrated. So sometimes your thesis can be right, but just your timing is off. You're bail on all your positions, and the next week, and you're like, shit. But the more you hone it, the better you are. It is one of those things that it's a learned skill that you can build. Just stoke up knowledge wherever you can. Continually learn. If there's something you don't understand, have GPT interpret it for you. Just, be able to hold a conversation at a party on what's going on in the world economically and the market and know what you're talking about. Because the more you can do that, the better trader you'll be.
Mm-hmm. Do you ever follow the Commitment of Traders report? There's one trader that I follow. He's actually in one of the Market Wizards books, and he looks at the commitment of traders. And recently, he's been noting that so many of these speculators have been actually short the market, expecting it to collapse. And he usually waits until the market, until the traders flip bullish, and then get a failure, a news catalyst. Do you ever look at anything like that?
I mean, sometimes I do. I'll get it. JPM on their morning report will tell me, risk on, risk off. This percent of traders are doing this and doing that. To me, what's more important is what is the activity of the institutions rather than retail. Retail is always going to buy the dip and sell the top. I mean, that's just what they do, always. And institutions, on the other hand, can move stocks. Retail was able to move stocks pretty much twice, GME and AMC, right? And it was because they were able to somehow consolidate their buying power and focus it in on those two stocks, and able to move it and exploit a overshort weakness in the fundamentals. Other than that, in order to get retail traders to have an impact on a stock like Apple, for example, I mean, you'd have to hone the entire buy. So the sentiment of retail traders versus the sentiment of the traders and institutions is very important to distinguish between the two. Of what are you following, and who's short? Is it retail short or is it institution short?
Mm-hmm. We have a question from the audience. Nuno writes that he follows you on Real Day Trading and loves your wiki. And he says, I know for you, the market is 65% of it. You started to point that the current market is behaving strange up with all the news and problems in this environment. Do you change your sizing if the market seems awkward, or do you just apply normal position sizing if the SPY graph shows you that makes sense?
I still have, and I know we talked about this at length in our first interview, a bit of a gambler in me. All right, more than a bit. And so I'll tend to do the opposite sometimes and increase my position size when the market's acting odd or counter to what it should be doing. When there's a glitch in the matrix, so to speak, it just adds for me that extra kind of sense of I guess that feeling you got when I was on a blackjack table, I suppose. It's not behavior that one should model after. One thing I did do is I noted way back prior to Q1 of this year, I was looking at, because this is a business and you have to treat it like a business. And so at the end of every month, I look at my results and I look at my earnings and all of that. And I noticed since the bear market started, my average returns were off by 10 to 15%, right? And it was edging up, started off 10%, 15, going up to 20. And at that point, as a business owner, you have to decide, am I okay with that dip in revenue, or am I going to supplement it somehow? And so I decided to look for alternative, outside of the method that I use, alternative ways to supplement that income. And some of that comes from earnings trades. Some of that comes from, shorting a top when normally I wouldn't. And I'm still honing that to replace that missing revenue. And you can do that when the market's acting atypically, because When it does that, there usually are areas or cracks that you can find to exploit because it is atypical. When the market's typical, all those cracks are sealed up. You think you're going to find arbitrage and sort of thing. You're not. You're not going to be able to find it. That's been sealed up. Market makers lock that in. You're done. But when the market is acting strange, and part of that is because we introduced zero DTE options into the market just a year ago, and it's been only the last few months that institutions have started coming in and using those with significant volume to hedge. That changes the entire tenor of the market, and they're still trying to play catch up. So yeah, at those points, I will do the opposite. I tend to increase my position sizes. 500 calls on dominoes attest to.
Mm-hmm. Great. Thanks for sharing. We have a question from Tessa. Tessa?
What's up, Tessa?
Yeah, Vincent. I know we're a little bit over. Are you okay on time or?
Yeah, sure.
Okay. I wanted to go back to that question that Ian started asking you earlier. I think the question was, the typical trading strategies that contributed to your Q1 success. And then you were starting to say something about that what you noticed, something about when traders are winning, they start to ask, like, should they take profit at this point? Something like that. I was wondering if you can continue what you were saying about that.
Yeah, sure. One of the problems right now that I'm sure a lot of traders can relate to is, and I can relate to, is you have trouble trusting this market right now, right? Like today, okay, after a certain point, you go, all right, this is a bullish trend today. But very hard to trust it, right? You're always thinking this is going to and can reverse and might reverse at any minute. And so it becomes hard to trade. We call it LPTE, low probability trading environment. And every time we announce it, everyone's supposed to take a shot. And by now they're all alcoholics because it's just so constant. And what it does is as a trader, what you need to look for in those type of environments where it's very difficult to trade is to find the one or two trades that the market itself is going to have minimal impact on, because the stock is so strong or so weak. Like today, Target was so weak that even if SPY was going up, Target was going down. That gives you more confidence to hold that trade longer, because you know that even if the market were to change course or go against me, the direction and the trend of the stock that I'm in is likely going to continue and not be impacted. You can then add to your winner. Then you can have more faith in that trade because it is, independent of the craziness that's happening in the market itself. And so the advice there is to trade less, but when you find those trades, pounce on them.
Great. Good answer. Thank you.
Thank you, Vincent.
Any other questions from the audience? One last quick question. What do you think about prop firms and getting funded using prop firms?
I have a post on that. I am not a fan of prop firms. Their job is to basically take your money and you pay them for that and then suck up all your commissions. You will very rarely meet someone who became successful through a prop firm. Now, I'm not saying that they're all bad, but read the fine print, make sure you know what you're getting into, and ask yourself, why would a company give me $50,000, $25,000, whatever it is? Why would they do that? Why? Am I that good? Right? Because if I were that good, I wouldn't need to be using a prop firm. I'd be making my own money. So what is their motive? You get nothing in life comes free, right? So what is their motive at doing that? Read the fine print, and the better prop firms are the ones that make you go through hell, level after level after level of proving yourself before you actually can get access to cash, and don't charge you for the privilege of putting you through hell. Always read the fine print on them. And even when you do, it's a very difficult idea, because the idea you have in your head, oh, I'm going to be given an account. It's going to have money in it. I'm going to trade the account. They're going to keep part of the profit, and I'm going to take part of the profit. I have nothing to lose. Awesome. Smack yourself in the face, realize that's not true, and read the fine print.
Great, Vincent. Thank you for your candidness on that question. Okay. Well, great. Thank you very much, Vincent, for coming on Chat with Traders Community. It's been very illuminating. Anyway, how can our listeners get in touch with you?
Yeah, I'm on Twitter. Obviously, you can go there. The Real Day Trading Community and Reddit. And I'm in the One Option chat room all the time. And, you'll see my moniker, Harry Seldon, which is off the Isaac Asimov character. And I'm usually the person yelling at people and telling them to stop trading with real money and to go back to paper trading or trading one share until they can consistently become profitable, which is what all traders should do, which is stop losing your damn money all the time and putting more money in. I know it sucks to go back, but you really need to start back at the beginning and build yourself up to becoming a good trader, a consistent trader. So I'm available. I'm out there. Reach out, and I'll try to point you in the right direction.
Thanks for coming.
Absolutely. And best of luck to everyone. I will see you all out there.
Great. Bye-bye.